Hi, and welcome to today's, we continue today with the last presentation of today. We always said we would take a sneak preview. We now have a company that has given a little bit more than a sneak preview because you have guided Eric from WindowMaster. So I think we can dig a little bit more into it, but I think I will hand the call over to you. I know you have a lot of say, so I will not take any more time.
Thank you very much, Michael, and thank you very much for having this opportunity to present WindowMaster to a big, more Nordic platform. So let's shift slide, please. Yeah, and again, please. Just to give you an introduction to WindowMaster, then we are what we call a clean tech company, and I will come into why we can call ourselves a clean tech company. We actually have existed for 32 years, and we were established in 1990 by the Velux group, and then we were taken out of the group at a management buy-in in 2015, and then we were publicly traded with an IPO from October 2020. What we do is that we deliver what we call sustainable indoor climate solutions, and that we deliver into the building industry. We can say we are a niche company in a niche industry so far, and we are dedicated to what we call the commercial building market. That means education, healthcare, office buildings, sports facility, culture, shopping centers, etc. We are not in the residential market, and that's why you can say impact on what's going on macroeconomic at the moment doesn't quite hit us so far, so we can see. We are also based on, you can say, in a global context. We have sales subsidiaries in Norway, United Kingdom, Ireland, Germany, Denmark, Switzerland, and then also 2 places in the North American market on the east and west coast of the US. And we have our production site in Herford in Germany, which is very centralized for the European market, but also our global supply chain. So let's move on, please. Yeah. So what our solutions they consist of is that we make hardware. We also make software. The hardware is motors for controlling all different kinds of window types, skylights, facades, etc. And then we also make the controls ourselves, and we also develop the software and the algorithms that run our systems. We deliver into solutions like natural ventilation, mixed mode ventilation. That's where we mix with traditional mechanical ventilation. And then we are also quite strong on what we call smoke and heat ventilation in the global or in the European markets as such. We are, you can say, a part of the digital building systems, BMS systems. We can run our systems in conjunction with BMS systems, and we can also run our systems as a mini BMS systems, where we also can control solar shading, cooling, heating, lighting, mechanical ventilation. So we all about making the right indoor environment, which we control actually in many buildings with our systems. So that's a bit of system. Let's move on. Here we see, just to get the principles of what we do, we have this cross section of a building, and here you can see there are some movements of, you can say, the red arrows. That is hot air that moves up, and we have the blue arrows. That's air coming in. And what we are really good at, and we are very unique at, is that we are able to control the indoor environment with our algorithms. We can control the skylights, the windows, facades, etc. That we are very good at, and we are quite unique in doing it with our systems. And you can say, what is feeding then the information for doing this? That is sensors that are existing sensors in a building, or it is our own sensors. So it's all about building the optimal indoor climate with using, you could say, actually renewable energy, because air is renewable energy. So we're not moving the air mechanically, but we are lifting up the air as a renewable energy. Yeah. Good. Let's move on. Also, when we say we are a clean tech company, that's because I would say we're going to be talking about our footprint later, but we also have a strong handprint. And what I mean by a handprint is that there is a real positive impact by using our systems in buildings. And what we do, actually, we mitigate climate change in buildings, because we can, if you look at, compared to a traditional AVAC, that's a mechanical ventilation system, we can reduce energy savings from 50 to 80%. We can also reduce the CO2 emissions from 25 to 70%. And we can also use our system both to, they can be upgraded, repairable and flexible products, because that's also part of sustainability, actually. Yeah. So there is a real good impact on what you call CO2 emissions, reducing CO2 emissions in buildings. We also are working with a much more healthier indoor climate, and there are things like better results in tests for school children. That is from studies that we are well-known studies. We also this about reduction of sick building syndromes. That is also at around 65% if you use our systems in buildings, in offices, and you can actually reduce the sickness rate in buildings, many buildings, because of using our systems. And this we've also said before COVID, so it's still the same, yeah. But it just become more actual, yeah. Also, there is a low installation cost on introducing our system, because if we look at the life cycle costs of our system into a building, they are much lower than if you'll see a traditional mechanical ventilation system. So here there is a strong handprint impact from our solutions into the building industry. If we go on, then because we also have a strong handprint, we also have a sustainability strategy, and here we are moving ourselves as even though we are a small SME in a global context, we are also at the forefront of having a sustainability strategy and being a very good global citizen thereby. We have already committed, as one of the only and few SMEs in Denmark, to the science-based targets, and we are also committed to that we will reduce to net zero by 2030. That's why you have this 2030. It's a bit longer out, but that's where we committed to. And we also committed to a very strong circular promise on our products, take back schemes, and using more and more of our electronic to reissue and recycle. So that's also an area we're working a lot on. So we also have this strong footprint, and for our science-based targets initiative, we will be reducing even before 2030 what we should. But that doesn't mean that's where we stay. We are moving actually faster on this already, and it's a big thing for WindowMaster to be a very sustainable business as such moving forward. Thank you. Move on to the next one. In this 2022 in June, we actually also announced our new strategy. And here we have a strategy period that goes to 2025. We call our strategy Accelerate Core. And if we look at that, the strategy, then some of the key things that comes out of this is a promise to grow our business at a 10 to 15% rate top line over the next couple of years until 2025. We also and we have also the ambition to have an EBT at 10% in 2025. And how we're going to achieve this? Yes, in our strategy we have 3 strategic priorities, which I just will look at on the next couple of slides. Yeah. So these strategic priorities, that is what will bring our top line into this growth range of 10 to 15% from next year and until 2025. First strategic priority is the integrated offering, because we have had, as a company, been very focused on selling our products from our factory, and about 80% of our turnover was originally from product sales. We are with integrating offering also going out. We're offering all the installation work of all the control side and get it to function, and we take the project management of doing that, so the system will work. We even also have some of the cable link for our systems to do. So we take control of the project management, and that means we also a lot more sure to get the orders in the end. And we have many examples actually this year of the strategy already working. That is, that's why that will, if we say the financial impacts on that, is that our revenue will grow on the top line, because we are making, our offering, our value proposition has just gone bigger. We also very focused on our service contracts, which we have. That is, of course, revenue growth again, and it's also recurring revenue. Then we are into an area that is called refurbishment. And because we are a business that are existing for 32 years, we are now seeing a large part of the projects we are doing is actually refurbishment of existing projects we have done around Europe, in the UK, and here we get in with our systems, because it's our systems already, but they may be 15 years or maybe 20 years old, and here we get in with our new technology and we upgrade. And that's where we see something that we're working on, is what we call faster turnover, because a lot of our business is project that goes over a longer time, and it's new build or it's a refurbishment of a building that we are not in already. But the market for refurbishment of our own you can say old projects we have done, that actually comes in very fast as a faster turnover, and it's also with quite a higher profitability. So you can say those financial impacts, that's why we are saying that we are going to achieve our growth until 2025, and of course beyond that, but we have the 2025 as the time where we want to be also very profitable on the earnings before tax, which is a really big ambition for us, and we want to achieve that. So if we move on, then some will also ask us, why have you been so optimistic? We come back to our guidance, and why are we relevant? Yeah, I believe actually we have never been more relevant in the market and in the building industry as we are today. We are a business with a sustainable strategy, with a footprint, and our handprint is also good. We can demonstrate that we are also in a position to decarbonize the building infrastructure, both the existing building infrastructure, but also new build going forward. So we've never been better placed, even though we are a niche company in a niche industry. But if we look at some of those, what is going to be driving our growth also, is that then I'm showing you 2 examples of the industry we are working in. And the first one I'm showing is this is the HVAC, the mechanical ventilation market. That is in 2020 was a $206 billion market. And we are trying also to take some of that. I'm sure maybe we are only, the natural ventilation is only one, maybe a half. But can we just take 1 or 2% of all this, and the industry of natural ventilation could do this? Then there is it's a big market, and even the market for HVAC is also growing about 6.8% on average per year. So here there is the opportunity, because we are competing. Our biggest competitor is not who is doing similar products as us, and there are very few of those. It's actually a mechanical ventilation business, and here we have a really unique position and a relevance in the building industry going forward. Next slide. Another area that we also work into, that is the facade market. That is the industry of making glass facades that we see in many big buildings around, and window systems and so on. And here we also know that market is also huge, and it's growing. And you will see that here we see a very similar growth rate, 6.85%, but it's a growing area. But what we know is that, and what is what the industry is saying in the facade market, that is that there is an increase in use of sustainable and environmentally friendly products, so you can make facades that are that help reduce the emissions inside the building. And we are very well positioned to be able to help the facade industry. And one of the biggest areas that will drive the growth over the next couple of years is actually the North American market compared to others, because there's a high need for a change. And we also know, and that was recently presented by the Biden administration, that, for example, the federal buildings need to go to net zero in the US, and the federal government is the biggest building owner in the US. So things are moving in the right direction, and you can say what is driving our growth is really you can say the green agenda, the North American market we're very well positioned in, and of course the relevance of our products and the way platform we have in the North American market and the North European market. Good. So let's move on. We have also this we did last week. We came out with a guidance for 2022, and we're going to be in a revenue level of a 233 to 236 million, and that matches very much the what we have said earlier, and that's around a growth of around 10%. Then our EBITDA level has also been looked at, and we've come out with 14 to 16 million. So we are narrowing our expectation, because of course we are December now, and we know more or less what's happening the rest of the year. But what is very interesting, and what rolls over to our guidance for 2023, is that if you look at our order intake the last 12 months, then that is at a level of 250 to 260 million Danish kroner. That means it's a higher than our revenue, and that means that trickle over to next year, 2023. And we've been seeing some very exciting projects come in, and we are still seeing some more coming the rest of this year. So that gives us the you can say our guidance for next year, saying a revenue around 260 to 270 million Danish kroner. That means we will be in our 10 to 15% growth range, and we are also expecting our EBITDA margin to grow and also grow percentage compared to the turnover. Yeah, and that is one of the key things that we are pushing for, is to really improve our margins, both on EBITDA and EBT. And that's also, you can say, we are on the way to achieve our expectations for 2025, where we want to be a profitable company that has an EBT of minimum 10%. So, and also what we can say is we are also a company, we're quite sufficient we generate positive cash. We also our debt level of multiples are going down, and we are able to expand our business also next year without going to a market for asking for more funding for now. So I think that is a little bit what I would say, Michael. So
let's take into some questions, Eric.
Yes.
Then there's a question here. You guide 10 to 15% growth. That's in the building sector. That's a very high growth rate. You touched upon something. Have you included any effect of the EU Green Deal and the US infrastructure? Meaning, do you put something on top of your growth that already next year you will start to see some of this being implemented? Some of the bigger political projects that need to be planned and so on.
Of course, they all have impact, and they will have more impact. But it's not that we are saying that on. You can say we are in a niche industry, but we are becoming more and more relevant, and we can also meet the demands for the Green Deal, etc. So, but we are not putting that on. The market will grow for our solution, and that is quite clear. And that's also why I'm saying we're becoming a lot more relevant to market forces now than we were in the past. But it's you can say we would love to grow even more, but the 10 to 15% is what we're looking at now. But if we look at the North American market, and if you look at the US, then we are still very niche. 5% of our turnover this year will be from the North American market, I have to say. And we expect in 2 to 3 years, it's 10% of our turnover. And of course, we're also growing. So the growth rate in that market is a lot higher. And we will see, and we are beginning to see some very interesting projects coming up in the North American market because they're going a more sustainable also in their building portfolios all over the US and Canada.
And so now we are touching upon the US. That there is a little bit of uncertainty in the business on how much needs to be produced in the US to get in under this. You know, we are starting an EU trade war. Can you elaborate a little bit on whether you have these issues? Is it enough to have sales offices? Will you also need to put some assembly into the US to really target the federal part of this market?
Yeah.
Any thoughts about that, Eric?
Yeah, but I can also say we don't have any other, you could say, US manufacturers of our products. The market was run by 3 small distributors, and we have bought one of them. And we are growing our business from that. And we actually have in our North Wales in Pennsylvania, in our facilities there, we are actually able to adapt some of our products already. And it's also our intention to move on to a certain manufacturing that is assembly. But we will never get to be American made, because a lot of the electronic stuff comes from Asia. But we are ready to move on more assembly in the US for the US market. And I'm sure that is something that will be needed going forward. And we've also said it, we have released to the stock market info about that we will be doing it going forward.
Perfect. So I just see a lot of debate out there about what you need to do actually to sell into the US market. Then there's something about this, we don't know it, and you don't know the macro. I don't know it. Nobody knows it, but there is some kind of expectation of a big slowdown in the building industry, which you operate in. And you still guide this. So the question is, what is driving those expectations? And maybe also, if you can touch a little bit on it, is it refurbishment? Is it your recurring sales? Is it your order book that kind of gives you these things? And do you see increased order intake from refurbishment and other stuff that you might not catch when you look at the building industry as such, not building new, but you might have to refurbish a lot of stuff. So a little bit of elaboration on what goes into those numbers.
My view, sitting from as a CEO of WindowMaster, then I have to look at it a bit optimistic. The market out there, as I always say, always expect the unexpected. You never know what's going to happen, and we've seen that the last 2 years, 3 years, things have happened. But for me, at the moment, what I'm seeing is a fog. But behind the fog, it's quite optimistic. And that is what it drives me, and the business in WindowMaster. We've never been more relevant than we are today. We are working in the commercial side of the building, and we're not in a residential side. And I know the residential side, that is where there is a lot of difficulties at the moment. There is a slowdown in this area. But our solutions are going in. We are going in as a niche supplier to the industry, and that's why it can be done. We can look at the market saying we are relevant, and legislation and public investment and the need for making a more sustainable buildings. All that is driving the demand for our products. So that's what I'm working for, or to achieve, to get a bigger amount of that. But remember, we're still a niche company, and we can grow quite well as a niche company in a niche industry.
So your order intake is your radar taking you through the fog, and on the other side, you are pretty sure what is happening. Then there's I don't know how much you want to elaborate on, but let's take a little bit further on the 23 here question. Your target is 15% if you go to the EBITDA. You mentioned the EBIT. We can always. And next year you are expecting 9 to 10 there on the margin side, the EBITDA. Yeah. And next year, as I understand it, you get some price increases and I guess maybe also some normalization in some of your input costs. So so that's 9 to 10, and I guess it's a lift of compared to this year. But you also need to do some lifting in 24 and 25. What is that lifting going to come from on the margin side?
Good point, because if you look at our business, and we had a price increase around 9 something, a general price increase 1st of January this year. But because of all the trouble and what was in the going on, we had PPV cost, and it was a very difficult time in the first half of this year, and that has really impacted our EBITDA level this year. We introduced what we call surcharges on our products, and that was between 5 to 15% on our product 1st of April. And so we were able to absorb those costs, but we also seeing that some of the costs have gone down, like transportation, and also those higher, what we call, we have to go and buy electronic products for our suppliers and so on. All that we're away from. So going into 2023, we still have that surcharge because that has been included in the prices. So we're going in higher margin. We're not having a price increase 1st of January. Let's see what happens. But that's not the expectation. So that is a carryover effect also from the second half and the Q4 into the next year, and that's why we're also optimistic about that our EBITDA margins will increase.
Yeah, perfect. And I don't know, and this was this year movement, and you still also expect to raise it in 24, 25. Is is that the bigger revenue going on? That is the biggest driver of that.
Yeah, that is the driver. I mean, you can say also efficiencies and productivity gains in our organization, and we're getting bigger projects, and then we can move more because we also do some work through partners, or we source in work from outside. So our fixed cost base is of course increasing over time, but we also see productivity go up, and something that has to go up because we are a company with a certain fixed cost base already, but efficiencies and productivity will actually increase our, you could say, our operating margin and our bottom line results.
Thank you. We got to the questions. Thank you, Erik, for joining us today and explaining.
Thank you very much.